All right, perfect. Thank you so much. Hey, everyone. My name is Joshua Martinez, and I'm excited to be here today. We're going to talk about some investment techniques. We're going to get into the live market. We're going to discuss specifically stocks and options. We're going to share with you a new way or a unique way of how to invest into the actual market to where we believe that can put you in a position to be able to potentially 5 times your returns in 2019. Some of the unique things that we have here, we've outlined about $25,000 worth of trading opportunity. We have that video available on demand. We want to give you an opportunity to get that as well. We're actually going to utilize a technology today that took about 20 years of refining and experience to put together that kind of provides direction, entries, stops for risk management, as well as limits to maximize profits. One of the exciting things that we're seeing, especially in the last few months inside of the stock market, the opportunity or the overall average daily trading ranges have been about 2 to 3 times and sometimes even 4 times what we've seen in the last 2 years. What that basically means for you is that you're going to be in a position to be able to make more money faster than ever before in today's market environment if you know what you're looking at and if you know how to do it. And so I have about 1 hour with you, and I just want to make sure that I can kind of give you all the tips and the tricks, the nuggets, and everything which we believe that you can be utilized to be very, very successful, not just today, but also today, this week, this month, and for the rest of the year. In front of you is a risk disclaimer. It just means there is risk involved in trading options. You should never invest money that you cannot afford to lose. Always keep equity management in mind. Understand that we are not CTAs, which stands for Commodity Trading Advisors. And what that basically means is this. We're going to show you exactly what to do and how to do it. One of the things which we can't do is we can't do it for you. So just understand that you have all the control and you can make the final decision on whether or not you want to place the trade or if you want to pass on the trade. For those of you that do not know who I am, let me introduce myself. My name is Joshua Martinez, and I'm a 10-plus year trading veteran. I've personally taken a $500 US initial deposit investment, turned it into over $39,000 US of profit from it. I'm a published author, international speaker, professional analyst, and I've trained tens of thousands of traders from all around the world. I'm a full-time trader myself, but most importantly, I'm a father of 2 beautiful boys. I have a 4-year-old boy, a 2-year-old boy. I married my high school sweetheart. My wife and I have been married for about 5 years, but we've been together for 16 years. We met when we were 16 in high school, and we've been together ever since. And so she is the big reason why I started investing in the beginning with. A lot of it was because I really wanted to have a family, and I wanted to have the ability to spend time with my family because I grew up in a household to where Dad was always gone, Dad was always working, and I always said to myself, I want to be with my family. So that's kind of my big why of why I started investing in the first place. One of the neat things is I've been able to teach this life skill to a lot of individuals, and it kind of grabbed a lot of attention from outsiders. So you may have already seen me, heard me, read about me in the following areas: Your Trading Edge, FX Trader Magazine, Equities.com, Executive Trader, as well as TraderPlanet.com. So what you're about to discover in a moment is how to potentially 5 times your investments, how to potentially win over 80% of your trades, and how to potentially gain 90% or have a 90% potential growth within the next 90 days. And the reason why we say that is because that's what we've been able to accomplish here at the Steady Trader in the last 90 days. And we just want to share with you what we're doing, what we're using, so that you can potentially do it as well. Okay? So you may want to write this down. There's a $25,000 US trading opportunity that's taking place. And it's not just one opportunity, it's a collection of opportunities. And let me just kind of ask this question. Type in a M-E, into the question section box. If an extra $25,000 US in the next 90 days could kind of make a little bit of a financial difference in your life. Yeah, so that's Paul, that's Carol, that's Carlos, that's Suhas, that's Scott. What we have is my really great friend, Serge. He put together a video. He actually hosted it live in front of hundreds and hundreds and hundreds of traders. And he outlined exactly the stocks to focus in on, what he believes that the market's going to be moving. And Serge is just not like a normal type of trader. He's been trading for over 2 decades and worked with some of the largest banks and the largest hedge funds. And he kind of knows the inside secrets and tips and tricks of what the big boys are doing. So he really outlined exactly what to do and how to do it to take advantage of opportunities. What's exciting about this is a lot of the opportunities to make this money require, as crazy as it sounds, requires like realistically no money invested into the market, which we're going to talk a little bit about today. It's called vertical spreads. I don't know how many of you have ever traded those, but it's kind of a very unique way of investing. Okay, so the Steady Trader is a company, and Serge is the leader of the organization, and what he does is he teaches traders how to trade options. Okay, he provides them technologies and technologies and strategies and tips and tricks, and he really takes the time to explain what took him about 20 years to learn. And what that basically is doing is giving people the ability to have a streamlined experience of the end goal in mind, which is results. And what I mean by results, I'm referring to this. Steady Trader clients, they're up 72% in the last 90 calendar days. So they have charts, they have education, they have access to professionals, they know how to find trades, they know how to generate results, they know how to have fun. And success is truly a formula, it's not a fantasy. And the Steady Trader really provides a fantastic formula of success so that you can avoid making costly mistakes. We're going to share with you exactly what that is today. Okay, so here's a question. Anyone trade options now? Type in a yes if you currently trade options. Type in a no if you do not. We're going to go over some language here because we're going to talk about specifically a couple of things. Okay, Steven says, hey, I used to. Paul says yes. Tip says yes. Ray says no. Steven says no. Carlos says brand new. Okay, Carlos, if you're brand new, you may want to grab a pen and sheet of paper because we're going to go over some basic definitions. And I'm going to do my very best to explain this, like what's the purpose of an option or how people use them. If you're a super expert and you're kind of like, hey, Josh, I know everything there is about options, the next 5-10 minutes may be just a refresher for you. Stick with me. I'm going to share with you some amazing technology which is allowing Serge and his clients to win like upwards of 80+% of the time. And then I'm going to share with you exactly what they did to get a 72+% gain, okay? So today we're going to talk about credit spreads. And credit spread is a form of an option. It's basically when you go long an option and short an option inside of the same stock, okay? You have different strike prices with the same expiration date. The benefits of credit spread trading is you get paid up front, defined risk, and you have a default 75% chance of winning the trade. Let me kind of just touch base on that for just a moment. Type in me, M-E, into the question section box if you firmly believe that your trading results could be completely transformed for the better if you had a baseline of a 75% chance of winning every single trade you place. Type in me if you're like, hey, I could probably grow and I can have better results and I can have a little bit more fun if I had a baseline of a 75% chance of placing a trade. Hands down. And so that's what we're talking about. That's one of the biggest benefits of what Serge does here at the Steady Trader, and it's one of the greatest things that he teaches. And so we're going to get into the live market in literally just a moment. And what we're going to do is we're going to make some decisions on whether or not we want to buy or if we want to sell, or if we want to take, or if we expect the stock price to go up, or if we expect the stock price to go down. From there, we're going to make a decision on the approach, because I want to bring you to the actual broker platform and show you how to place a credit spread today, okay? So you may want to write this down because we're going to utilize it in a moment. It's called bull-put spread. A bull-put spread is, for whatever reason, we determine that the stock price is going to go up, whether we use a scanner, whether we use trend lines, Fibonacci's, whatever. What we're going to do is we're going to sell a put underneath the stock price. When you sell a put underneath the stock price, you get paid up front. Essentially what you're doing is you're taking on some risk and you get paid for that. Strategically, you do not want to have what's called a naked trade. A naked trade is when you have unlimited risk. So strategically, you're going to protect yourself by buying a put. These are just simple orders. So if you're brand new in options, I'm going to explain this in a little bit more detail inside the live market, okay? When you buy a put, that's going to cost you some money. But essentially what you're going to be doing here is you're going to be protecting your overall position. Now, I want everyone just to do a moment. I want everyone just kind of do some math and type into the question section box how much money this is. If you get paid $750 to sell a put, and then you pay $250 to buy a put, how much money do you have left over? How much money do you have left over? Go ahead and type that into the question section box. So Carlos says you have $500. So Haas says you have $500. W says you have $500. David says you have $500. That's what's known as the credit. So essentially the benefit of doing this is you get paid $750 to sell a put. You then go protect your position. It's almost like a stop loss. You pay $250. You get to keep the $500. No money out of your pocket. You have a 75% chance of winning the trade. You get paid up front. Type in the yes, why yes, if you like the idea of getting paid up front, no money invested into the actual position itself, and you have a 75% chance of actually winning the trade. That's what I'm teaching you today, okay? And that's what we do here at the Steady Trader. So here's how this works. So you have the stock price, which is above your put price, and above your put price. Now, that's your risk. There's going to be an expiration on the overall position because we're dealing with options. It's going to be an average of 2 months plus. And essentially, this is how this works. The stock price can go against you, but you're still in the money. The stock price can go sideways, but yet you're still in the money. The stock price can go your way, and yet you're still in the money. The only way in which you truly lose is if the stock price just completely falls through the roof, or falls through the floor. But strategically, I'm going to share with you some technologies to prevent that today. Okay? And so what this realistically means is you have a 3 out of 4 chance of generating a profit. The stock price can go against you, it can go sideways, or it can go for you, and you can still generate a profit. It's only if the stock price completely screams against you is when you actually lose. But we have a protective put, so therefore we're not risking the house here. Okay, so a bull put spread is when we expect the stock price to go up, and that's the position we're going to take. I'm going to show you how to place that today, okay? Now, if we look at the stock price and we say, for whatever reason, we expect the market to fall, whether we use a scanner, technology, indicators, trend lines, Fibonacci's, whatever, we're going to take what's called a bear call spread. And it's the same exact thing, but in reverse. We're going to sell a call above the stock price. We're going to be paid to take on some risk. We're then going to protect our position so we don't have a naked position, which basically means we're not going to allow ourselves to have unlimited risk. We're going to buy a call, which means we're going to have to pay some money. We keep the difference. In this scenario, if we get paid $750 to take a trade, and then we pay $250 to protect the trade, we get to keep the $500 in between. Stock price can go against us, stock price can go sideways, stock price can go for us, and we can still generate a profit. It's only when or if the stock price goes all the way up that we actually lose, okay? Type in a yes, why yes, if you like this style or like this approach and theory of investing. So remember, no money out of your pocket. You get paid up front. You have a 75% chance of actually winning the position. It's actually pretty neat. Okay, so performance matters. What I did here is I went ahead and grabbed the last 20 trades that Serge pushed out. And what Serge does at the Steady Trader is he will take this approach and he will actually send signals. He will tell you when to enter in, when to exit, the prices, how to protect yourself. And right now he's winning about 80% of his closed positions. And so essentially what that means is I kind of took like a generic approach and said, okay, if you just took an average investment of $1,000, you could have realistically made over $824 in the last 20 trades, which is a massive gain of over 80% based upon your position size. If you took an average position of $5,000, you could have made realistically over $4,000 in the last 20 trades. And then for those of you investing a little bit more, a little bit more, larger, $10,000, you could have made over $8,000. So let me just kind of focus in on the middle. It's not too extreme, not too large, not too small. But in regards to like ROI, return on the investment, worth your time, making a difference financially, if I could teach you a skill today and show you exactly what to do and how to do it to where every 20 trades you place, you could potentially generate over $4,000. Type in a yes, why yes, if you want to learn that. And more importantly, what if you were able to place 20 trades a month to where you could get started the next 3 months where all you did was make $4,000 a month, just an extra $1,000 a week. Type in a yes, why yes, if that could make a little bit of a difference in your life. For most people, the answer is yes. And for most people, an extra $1,000 a week, $4,000 a month, it may not be completely, life-changing income, but it can absolutely allow them to have some financial breathing room, and it gives them the ability to compound and reinvest to where within months or heck, even a year, they could reinvest to the point where they're eventually making over $10,000 a month. And for most people, if they make over $10,000 a month, that begins to give them the ability to have financial freedom. And I think that's what we want to do today, right? So let's do this. Let's go into the live market. Let's show you exactly what to do and how to do it. I kind of put into the position and kind of share with you what we actually do as traders. Okay, so I'm going to be utilizing charting software, and I'm going to look at Apple. Okay, it's a stock price. Type in ME, M-E, if you've never, ever seen an actual candlestick chart before. Type in me if you're kind of like, hey, I've just never seen a chart like this. Okay, so David's never seen anything like this. Peter's never seen anything like that. That's okay. You're in the right place. Let me kind of give you a quick little rundown. What you're actually looking at, these are called Japanese candlesticks. And what they do is they measure price movement over time. So down at the bottom measures the time, so it's like a little graph, gives you the date and the time. The right-hand side will give you the actual price point of the stock, okay? And the upper left-hand side shows a symbol, and you can see this is Apple. Now these, it just so happens that we're looking at a 4-hour chart, which means every one of these candlesticks represents 4 hours of movement. So if you were to count 6 of these bars, that would be 24 hours of one day. What we do is we take the movement of the bars and the illustration of the wave movements, and we make investing decisions off of it or trading decisions off of it. We can utilize indicators, we can utilize trend lines, support and resistance, systems, you name it, to kind of give you the edge. But at the end of the day, trading really comes down to some really basic rules, okay? Do me a favor, grab a pen and a sheet of paper, okay? You may just want to write down these 4 basic rules. Number 1, okay, rule number 1, buy low in the buy zone. Number 2, sell high in the sell zone. Number 3, do not buy high prices. Number 4, do not sell low prices. Now, type in done, D-O-N-E, when you have those 4 rules written down. What we're going to do is we're going to kind of dissect and break down the overall, we're going to break down this Apple stock, and we're going to make a trading decision. And then we're going to make a decision on how we want to invest. Now, you got to keep in mind, we only have about an hour with each other, so I got about 40 minutes left with you. And so the learning curve of the live market, it's going to be a little bit more of an expedited experience, because I want to make sure that you really see the technology that kind of makes your life really simple if you're going to be a trader inside the stock market, or even utilize options, or even what we want you to do is utilize the vertical spread approach, okay? Okay, so let me ask a question. How do you determine direction? At the end of the day, you need to look at this market and say, is it going up or is it going down? So why don't you do this? Why don't you look at Apple itself, and why don't you just type into the question section box up if you think the price is going up, or type in down if you think the price is going down. Look, it can only go up and it can only go down, so you got a 50% chance of being right and a 50% chance of being wrong. So why don't you just go ahead and just try. All right, so Haas says it's going up. Peter says it's going down. Carlos says it's bouncing. Tib says it's going down. Val says it's sideways. Lisa says it's going down. Caroline says it's going up. Look how you have a lot of discrepancy, okay? Now, watch what happens when you can just bring on a basic trend line. Okay, nothing fancy, nothing crazy, but one of the things that you're going to learn is that the market is a pattern-driven market, and it does the same things over and over again. And essentially what it does, it'll divide the market, and what you want to do is you want to find areas where the market likes to fall and where the market likes to rally. Let me just kind of ask this question, and all I want you to say is yes or no, okay? So when I bring on this trend line, all I want you to say is yes or no. Does the market have history of falling at, on, around, or near this down trend line, yes or no? So Val says yes, Tim says yes, Gary says yes, Peter says yes, David says yes. Okay, so essentially what we do as traders is we're going to do the same thing as like the hedge funds and the bank traders and the money managers are going to do. We're going to look for patterns or angles inside the market that are invisible to the naked eye, and then we're going to try to find them with like trend lines, indicators, systems, technologies. We're going to recognize these patterns and make trading decisions off of them. Okay, so if the market likes a U-turn at, on, or around, or near this downtrend line, usually when the market breaks above it, does everybody see how the market broke above it? This now refers to the buy zone. Anything above the actual trend line is the buy zone. Anything below it is the sell zone. So the sell zone, buy zone. You want to look for upward momentum opportunities in the buy zone, and you want to look for downward momentum opportunities in the sell zone. Now, watch what happens. Market breaks that angle, and the market starts to do what? Utilize the backside of the trend line, and the market begins to provide a buying opportunity or upward momentum opportunity. Type in a yes if you can confirm that. Market used the angle to fall, then also the market used the angle to rally. Now, like I said before, one of the neat things about the market is it does the same things over and over and over again. It's a pattern-driven market. So if you think about this for just a moment, you'll be able to see that the market is making lower lows, lower highs, lower lows, lower highs on the way down. More than likely, what this market's going to do is start to make higher highs and higher lows on the way up. Now, I'm not saying this market's going to start trending bullish forever and ever and ever. I'm just letting you know that according to the pattern, the market's inside of the buy zone, and we just came off of a low price, and we're starting to extend towards a high price, right? So I guess the question is this. Do you want to look to buy in the buy zone, or do you want to look to sell? Type in buy if you want to look to buy in the buy zone. Type in sell if you want to look to sell in the buy zone. Look how everybody's now on the same page. Gary says buy, Suha says buy, Steven says buy, Scott says buy, Caroline says buy. So it appears now everybody's on the same page. And that's what you want, right? You want to utilize the technology, a way of identifying a pattern to where you're on the same page with the majority of other traders. Because if you look to buy at the same time that everyone else is buying, more than likely you're going to generate profit simply because that's where all the money's going to. Okay, type into yes if that makes a little bit of sense. Okay, so if we're expecting this market to go up, you can take the stock approach, right? And you can just simply go in here and buy the market. The problem is if you want to make any real money, it's going to cost you like $15,000 to invest. Why? Well, because, you know, it's $156 a share. If you buy 100 of those shares, it's well over $15,000. If you want to protect yourself and get involved in options and really hedge your position, it's going to cost you even more. So, you know, the reality of this is you can buy 100 shares outright, spend over $15,000 in Apple, have an opportunity to make, I don't know, $2,000–3,000, risk $2,000–3,000, or you can take a vertical spread approach to where you have no money physically invested into the actual position. You get paid up front, and then you have a 75% chance of actually winning the trade. Type in yes, why yes, if you want me to share with you how that works and how to do that. We only have like 30 minutes left with each other, and so I want to make sure that we get right to the point and you kind of know how to place these trades, and better yet, how to find better opportunities than what we see on the screen. DOM says, and what if you lose the trade? Well, then you got to pay. So there is downside to it. You have to pay if you lose the trade. What's neat about that is because there's no money invested into the actual position, there's really no upfront cost. So you really only pay if you lose. And at the Steady Trader, Serge utilizes investment techniques that he's going to teach you of how to risk less than what you make. So for example, let's say we place a trade right now and we get paid $500 up front. We're going to utilize a equity management technique to where we can't lose any more than $500. Type in the yes if that makes sense. So if you really think about it on the grand scale, if we place 10 trades and we make $100 per trade, 7 of those trades should win. 3 of those trades should lose. But if the losers equal less than $100 losses, we're net ahead. So that's pretty phenomenal. That's kind of what we're going to be going through. Okay. So what we're going to do, let me kind of explain how this works. In trading vertical spreads is very much like an insurance company and a car. Okay, I'm going to give you this little analogy, and then I'm going to show you how to place the trade. When you have a car, here in the United States, where I live in Florida, by law, we have to have insurance on our vehicle. And what I'm actually doing is I'm paying an insurance company to take on my risk. So I pay them a premium on a monthly basis, right? Type in a yes if that makes sense. So if I were to get into a car accident and my vehicle is destroyed, I'm not the one paying the tens of thousands of dollars to replace my vehicle. The insurance company is. Okay? So in the vertical spread world, you're going to become the insurance company. So you're going to be paid, you're going to take the approach of being paid to take on another trader's risk, in theory, okay? Now, you're not going, so it's kind of like you're insuring a car, but what you're doing is you're insuring a trade. But you're not going to insure the entire vehicle itself. What you're going to do is you're going to get insurance on your risk, okay? And what you're going to do is you're going to pocket the difference. So long story short, we're going to be paid to take on some risk, and then we're going to pay another trader to take on most of the risk, and we're going to act like the middleman, and we're going to keep the difference. Okay, let me show you how this works. So if we believe this market's going to go up, for whatever reason, hypothetically speaking, what we're going to want to do is take what's called a bull put spread. And essentially what we're going to do is we're going to look at the previous low, and we're basically just going to say, okay, right around $150, we're going to look to take the position of sell a put, okay? And basically we're going to, because we're selling the put, we're going to be paid to place this trade. So we sell a put, and that just basically means we're paid up front to place the trade. Type in a yes if you understand that so far, especially if those of you are brand new. So we're going to be paid to place this trade. No money out of our pocket at all, period. So it's not like you have to invest into the actual opportunity. You're getting paid to take this position. The problem with this is if this were just to completely fall, we would have unlimited risk, and that can be very dangerous. So what we're going to do is we're going to protect ourselves. And if you're active in trading in other markets, you're kind of, you know, this has like a stop loss. It's just an automatic exit for loss. And to protect ourselves, we're going to place what's called, we're going to sell a put. Excuse me, we're going to buy a put. We're going to buy a put. Basically, we're going to pay to pass on risk. Okay? So we're going to be paid, we're going to sell a put, and when we sell a put, okay, we're going to be paid to place that trade. Then to protect ourselves, we're going to buy a put, and then we're going to pass on our risk to someone else. And then we're going to keep the difference. Type in a yes if this is making a little bit of sense. I know it's redundant. I know I keep asking for confirmation, but I really want you to kind of understand that all you're really doing is brokering a deal, in theory. You're getting paid to take on risk, and then you're taking a lot of your risk, and you're paying someone else to take it, and then you keep the middle. So let's go into the actual live broker itself. I utilize, anyone else utilize Thinkorswim platform? If you don't utilize Thinkorswim platform, you don't have to. It's a very popular broker. And what I'm going to do is kind of walk you through. When you first look at this, it kind of looks crazy, especially if you've never looked at charting, but trust me, it's not as challenging as you think. What we're going to do is we're just basically going to type in Apple on the upper left-hand side. There's Apple. How do you read this? Left-hand side is your calls, right-hand side is your puts. We're going to be looking at expirations about 2 months out, right around March area. And what we're going to do is we're going to look to sell a put. So here's your puts, here's your bids. We're looking to sell a puts. The current price is about 156. So we said, hey, if we sell a put right around 150, or heck, we got 152, this is how we're going to take the approach, okay? We're going to right-click and hover sell. Okay, do me a favor, type in a yes if you saw that. Let me do it one more time. We're going to right-click where it says strike price 152.50, okay, and then we're just going to hover over sell. This is how you do this, okay? You're going to do that. So once again, we're going to right-click over 152.5 where it says bid on the puts, right-click, hover over sell, and then we're going to left-click over vertical. When we do this, essentially, what I like about Thinkorswim, it automatically pairs the next strike price to protect yourself what we want to do. Okay, so remember, we're going to be paid to take on some risk because we're selling a put. And then we're going to buy a put because we're going to pass on our risk to someone else. We're going to keep what's in between. So I want to make sure you thoroughly understand exactly how much we're going to make if we were to place this trade. Where it says max profits, go ahead and type in this number into the question section box. How much money is that if we were to place this trade? How much money is that where it says max profits? Carl got it right. Carlos got it right. Peter got it right. Now, if you're kind of looking for your question section box, you may want to utilize the, click on that little orange box with arrow in it, and then just go ahead and type in there where it says chat. Yeah, Scott got it right. Peter got it right. Yeah, $850. So let me kind of put this into perspective. Okay, and we only have like 20 minutes left, so I want to make sure we thoroughly understand this because now we're going to bring in some technology to how to find trades faster that have more opportunity than what you see on your screen. If we were to place this trade, there's no money out of your pocket, which means you don't have to invest into the actual position. Okay, you get paid $850 to actually place the trade. You're protected, which means you have, you don't have unlimited risk. You have quantified risk. You have a 75% chance default of winning the trade. And so to me, when I first learned how to do this from Serge, my big question to him was, if this is so great, why isn't everybody doing this, right? If this is so amazing, why isn't everyone doing this? And he goes, the problem is this right here, Josh. Go ahead and do me a favor, type in a yes if you see max loss is $1,650. Right? That doesn't make any sense. I said, well, you know, if I'm going to make $850, and if this trade were to completely go against me, I'm going to lose over $1,600. I said, this doesn't make sense. He goes, right, that's why a lot of people don't do it. He goes, but what I've been doing for the last 20 years is refining this methodology, and there's an investment technique that I teach at the Steady Trader to where we can turn this $1,650 risk into under $850. And so let me kind of put that into perspective for you when we go back to the charts. Okay? And then I want you to kind of make a decision if you want me to keep going or not. So here's the reality of this. If we were to do this trade on Monday when the market were to open up, it kind of works like this. We get a credit, which means we get paid $850. Okay? Our risk is less than $850. Okay? We have a 75% chance of winning the trade. Okay? Last but not least, no money out of pocket to place trade. That's how this works. Okay? If we were to place this on Monday, we will get paid $850 up front in the form of a credit. We have about a 2-month expiration. Our risk is less than $850. We have a 75% chance of winning the trade. No money out of pocket to actually place the trade. If you're anything like me, when I first started trading, I was a personal trainer. I actually went to school to become a firefighter and EMT. Graduated as a professional firefighter 1 and 2, became a nationally certified EMT, emergency medical technician. I was making less than $20,000 a year as a personal trainer. I couldn't get a job as a firefighter because there was a hiring freeze. All I had to my name was $500. If I knew about this and I had the opportunity to generate $500+ per position without any money out of my pocket, a 75% chance of actually winning the position and being able to protect myself to where I risk less than what I could have made, for me, that would have been a dream come true. And so with about 15 minutes left of our time together, type in yes, why yes, if you want me to share with you an expedited approach on how to find trades like this on a faster scale to where through a few clicks we can utilize like a scanner that can visually share with you exactly where to buy, exactly where to sell, how you can receive signals on where to place your stops, where to place your bull put spreads, your bear put spreads type of scenario. Go ahead. So that's Lewis, that's ABD, and that's Tim. And before we do that, let me just kind of see how this works. Johnny says, do you let them expire? No. What we look to do, Johnny, is most of our positions are going to be closed within about 3 to 4 days. Okay, so a lot of these trades, because of the market movement and what I'm about to share with you, is so market movement moves so fast, we do have an opportunity to close out early, which means we can realize our profits much faster. Okay, has anyone ever seen this before? Go ahead and type in the yes. Have you seen this before? It's called, anyone seen this? It's called the Market Rover. Okay, Manny says no. Nassar says no. Tib says no. Okay, well, just kind of give you an idea. What this does is this breaks down 3 major markets, the SPY, the QQQ, and the TLT. And the challenge with trading on the stock market is you have thousands and thousands and thousands of stocks to choose from. And the reality of this is when you look at stocks on your own and by yourself, you have large caps, medium caps, small caps, you have different sectors, you have different aspects, you have different markets, you have different approaches that you can take, you have larger time frames, smaller time frames, you have to find direction, entry, stops, limits. And the problem is when you're dealing with thousands of different stocks at one time, what ends up happening is you will waste a lot of time just trying to find a stock that meets your requirement. And so if you're going to be a stock trader or an option trader, what you really want to do is find a scanner. And this scanner is extremely unique because it takes a three approach process, and a lot of it's defined or mirrors the Bloomberg approach, which, as you know, those data feeds can be upwards of like $30,000, okay, which is crazy. But here's how this works. So Serge is the leader of the Steady Trader, and he's a 20+ year trading veteran, and he's phenomenal. He wins over 80+% of his trades. He's worked with the biggest banks in the world. He's a money manager. Like he's like a trader's trader. And so what he does on a daily basis is he will come on here and in Serge's quarter and he'll say, hey, these are the sectors and stocks that you should be focusing in on. You can monitor the VIX, and the VIX just kind of follows implied volatility, so you can kind of see if the expectation of volatility is high or expectation of volatility is relatively low. Then you have long-term, medium-term, or short-term with overall direction. Now think about this for a moment. Direction ultimately is the cure-all for any trading account. Because if you take a long position, or if you say, hey, the price is going to go up, and you take action on upward movement, as long as price goes up, you win. If you believe price is going to go down and you take action on downward movement, as long as price goes down, you win. It's only when if you believe price is going to go up and the price goes down is when you actually lose. And so what's wonderful about this is you have long-term, medium-term, and short-term expectations. So short-term, the SPY and QQQ is expected to go up. Now, down here left-hand side, you're going to see how there's different sectors: communication, consumer discretionary, consumer staples, and so on and so forth. Do me a favor, type in a yes if you can see that you have short-term, medium-term, and long-term direction on these different sectors. For me, that's phenomenal. In regards to understanding the bigger picture of how this all works, like you want to know this, and this is very, very important you understand that. And this is monitoring. See the SPY? If you look over here on the sectors, see how communication is 10.04%? That's 10.04% of the SPY. Down here at the bottom, we see technologies, 20.78%. That's technology makes up 20.78% of the SPY, which is really phenomenal in regards to kind of understanding how the overall market works. Right-hand side, you can do a comparison of market and sector performance. You can see side by side of the year change, the month change, and the week change. And basically, as a trader, this is everything you could ever ask for. Down here at the bottom, this is where the nitty-gritty takes place. Down here at the bottom is basically where you're going to be able to refine and look at your favorite stocks by typing into the actual symbol, or simply just finding trades. Left-hand side, how to read this is the symbol and then the actual stock name, which is very, very valuable. The type, the sector, the price, the percentage change, whether up or down, short-term, medium-term, or long-term. But here's what's really important, okay? To me, favorite, type in a yes if you can see B2E, B2H, VX, and GAP. Okay, so Gary sees it, Carol sees it. Again, it's just I'm hovering my mouse over it. It's where it says stocks, ETFs, and indices. We have 1, 2, 3, 4. These are 4 built-in strategies and algorithms that filter through all the markets. And so what I kind of want to share with you on the right-hand side is the actual chart. So if I click on B2E, what it does is it filters all the buying signals. Now, when I click on ABBV, on the right-hand side, look at it gives me all the buy arrows and all the sell arrows. It lets me know when I should be buying or when I should be selling. If I click on ADI, same thing. Right-hand side, you see update, lets me know all the buy signals, all the sell signals. If you look at ALB, it tells me all the buy signals, all the sell signals. I can do the same thing in B2H and VX. VX lets me know extremely overbought or extremely oversold. Do me a favor, type in yes if you can see that how SIG is extremely oversold and we're expecting the market to kind of bounce. When that takes place, notice how when things get overbought, you have sell positions, and when things get oversold, you have buy positions. That's very valuable. Anyone trade a gap strategy? To me, a gap strategy is probably one of the most popular strategies out there, especially inside the stock market. Essentially because the stock market closes, opens basically daily, Monday to Friday, you have a gap. Well, when you have a double arrow down, it just basically means for that particular stock, do not expect the gap to close that same day. If you have only one arrow down, it means, hey, expect the gap to close the same day. That's very valuable because most gap strategies are designed to either trade against the gap or trade towards the gap. And what you have here is a strategy that lets you know based upon algorithms and extreme history with it, which is accurate of like I said, Surge is winning upwards of 80+% of his trades, that lets you know when gaps are expected to be filled and when gaps are not expected to be filled. Okay, let me kind of give you a live example of how much money you can make if you were just to place a trade vertical spread style. All right, so here we are. We have, we just went ahead and did the scan, B2E, right-hand side. I want to make sure everybody can see this. Type in a yes if you can see that we have a green arrow that tells me to buy. And this is ALB. Okay. So if you're looking at a one-stop shop, what you can do is you can go ahead and transfer this information over and take a vertical spread approach right into your actual broker. But if you're anything like me, you're probably going to want to double check the analysis, right? So all I'm going to do is I'm going to take this information. I'm going to say, okay, hey, we have a buying signal on ALB. I'm going to go to my charts. I'm going to type in ALB, and I'm just going to confirm. Type in a yes if you can see that ALB was once in a consolidation range and now is extremely oversold. Now think about this for a moment. This market was once inside of a consolidation range. Here's resistance, here's support. Now, the market's completely oversold. It only logically makes sense that the market's going to come up and wave, come towards support, towards resistance, form that high price, and then dip back down. Type in a yes, and that makes a little bit of sense. Okay, so what you're going to want to do is you're going to want to ask yourself this question. How long do you think it would have taken you to find this opportunity on your own? We have about 10 minutes left. Gary says it would take me ages. Terrence says it would take me hours. David says ages. Caroline says I don't even know if I could have found this. But by utilizing the Market Rover, which is a phenomenal scanner which makes things simple, we found it right away. Okay? Now, think about this for a moment. If we were to come on here and say, okay, we expect the price to go up, so we're going to take a bull put spread approach. Essentially, what we're going to be looking for is we're going to be looking for the market. We're going to look to sell a put below these price points, because if you really think about this, even if we draw basic analysis, we already broke the inner trend line. The market has already begun to make higher highs and higher lows. Like the market's on the move on the way up. We're already making higher highs and higher lows. So we really want to sell a put, and you're going to learn how to do this through the Study Trader. Sell a put, and what we're going to be paid to take the trade. And then we're going to protect ourselves with kind of like a stop loss order, but what we're going to do is we're going to buy a put below there. We're going to buy a put, and we're going to pay to protect the trade. Type in a yes if this makes a little bit of sense. Okay, now all I'm now going to do is I'm going to take this information, I'm going to go to Thinkorswim, I'm going to type in ALB, okay, I'm going to be looking at some options that expire 2 months out, so right around the March area. I know the current strike price is right around, what price was it? $76. So, you know, if I get a $70 strike price and I go to sell a put, this is all I got to do to place this trade. Right click, hover sell, select on vertical, and then that's it. So I'll have a sell a put at 70. I will have buy a put at 65. And if I were to place this trade, how much money would I get paid if I were to place this trade? What does it say where it says max profits? $820. Now, for the average trader, if they were to place this trade, so let's just say you were to place this trade on Monday. Here's the problem that you're going to run into. You're going to have a risk of over $4,000 if you were to do this on Monday by yourself. But if you learn the techniques that Surge has to teach you, your risk would be less than $820. Does that make sense? So think about this for a moment. Here's the opportunity here. Okay, if we were to take a expectation of the market to go up. Okay, here's the expectation. We will be paid. We'll be given a credit of $800. How much was it? $820. $820. Our risk will be less than $820. We would have a 75% chance of winning the trade. Okay? And no money out of pocket. Type in yes, why yes, if you love that style of trading. Just think about that for a moment. You know, if you really think about this as a trader, and most people say to themselves, you know, I don't have a lot of money to invest. I don't know if I can do this, right? I don't know where to get started. And here at the Study Trader, we're saying, hey, you don't have to have any money out of your pocket. You got a 75% chance of winning your trade. You're going to be able to risk less than what you make. And the reality of this is we have a technology that can help you find trades. So I guess the question is, how does someone make this better, right? How would you make this better? What if, just throwing it out there, what if we could have a 20-plus year trading veteran email you directly exactly the stock to trade, exactly the price to enter in, exactly the price to exit, and notify you through your cell phone, through email, through a pop-up alert on side of the actual market rover to let you know when to take advantage of the opportunities. Type in a yes, why yes, if you're kind of like, well, that would really make a big difference. Well, at the Study Trader, that's exactly what they do. What they will do is they'll send you notifications on when to enter in, when to exit. They'll outline the entire scenario, and they'll say, here's when to buy, here's where to sell. And by the way, they're winning over 80+% of their trades. And to kind of put this into perspective, we have traders that are making upwards of over $4,000 to $8,000 a month within like the last 20 trades. Okay, so I'm pretty much right out of time. I have about 5 minutes left before I got to go. But before I go, let me just ask the question in the room. Type in a yes, why yes, into the question section box if you want me to share with you how I can further help you today. Type in a yes if you want me to share with you how you can get your hands on the scanner, how you can get your hands on the market rover, how you can get your hands on the trading signals that are being sent out. Type in a yes if you want me to share with you how the steady trader can train you everything that you need to know with foundation lessons regarding options and how to actually place these trades. Okay, so that's BIN, that's ABD, that's days, that's MIR. Okay, so let's do this. What I want you to do is take a look at your screen. And I'm a big believer in performance. And so what we're going to do is to make your life super simple, we're going to provide anyone who takes advantage of this opportunity today, we're going to give you an on-demand recording that's already ready to go that's going to outline over $25,000 US for the trading opportunity. Serge hosted a live presentation earlier this month. And he has identified a handful of actual stocks that you should be focusing in on in sectors and he's outlined all the trades, all the entries, all the stops, all the limits to where he believes to where if you were just to duplicate this opportunity, you have an opportunity to make over $25,000. Heck, even if you just watched this one little video and made $5,000 from it, it would absolutely be worth your time. So performance truly matters. And so what I wanted to do is I just basically said, well, what if you just kind of started out with just a simple stock approach and you just followed the market rover? Well, what I did is I pulled some scans and I just basically said, okay, if you were to duplicate the signals, how much could you have made? Well, in healthcare, you could have made $374. In utilities, you could have made over $1,134. In real estate, over $256. In technology, over $816. And just 4 positions, you could have made over $2,580 US. And that's just with like a $2,000 US investment average, which really means 129% gain. So this thing is on fire and it's working phenomenally. And plus, you couple that with the overall win ratio of 80+% of the overall signals, you're talking about, you know, putting yourself in a position of great abundance in 2019. Okay, so this is how this works. We have what's called the Ultimate Credit Spread Package. It's designed for everyday trading, swing and position style, and it's here to empower your results. You receive 12 months, the entire year, you receive signals. You have 6 on-demand option income secret foundation lessons. So if you have no idea how to trade options, but you love the opportunity, we're going to teach you how to trade options. And of course, we're going to teach you how to place these credit spread trades, okay? And then you get 12 months, an entire year of the actual market rover. We do have a priority loyalty savings because we're hosting this special event and because we're participating in the TradeThirsty event today. We're going to be giving a $500 US additional savings. So I want everyone to do this for a moment. Type or write down member, M-E-M-B-E-R, member, because you're going to use that in the promo code. It's going to be available for only today, okay? So you may want to write that down, especially if you're interested in this. Now, what do you get? You get 12 months of the market rover, 12 months of the credit spread signal service, unlimited access to the option income secrets course, 4 strategies. You can receive manuals with visual guides, step-by-step checklists, unlimited how-to videos, and live sessions once a week, so we give you a great amount of support. We do have an upcoming class next week. It will be recorded for your review. You get instant access to 6 lessons, and you can attend the live sessions. Our goal for you is to generate $2,000 to $5,000 a month as fast as possible and then grow from there. We're going to help you filter through the markets, increase accuracy, have confidence. So 12 months of the market rover, 12 months of the credit spread signal service, option income secret course, 4 strategies. The total value of this is $9,980 US. I have about 3 minutes left here, so we're going to kind of get right to the point. You can get this entire program for $14.97, okay, with the promo code. So you got to utilize the promo code. So you get 12 months of the market rover, 12 months of the signals, unlimited access, to your on-demand foundation videos, live, weekly, in-person sessions, and we can help. Think about it. If you just place 2 or 3 of these trades a week, you're in a position of making $2,000 to $3,000 a week. And so before we go any further, I only want to give this link. You got to go to www.thesteadytrader.com/live. I only want to give the link to those who want it. So if you want the link, go ahead and type in link into the question section box, and I'll go ahead and send it to you now. Okay? So Peter wants the link. Suhas wants the link. Paul wants the link. Okay. So do me a favor, type in yes if you just received the link. Okay? Paul says, can you trade the spreads in your 401k? Yes. Okay, so Mike, go ahead and type in the yes, you just received the link. Let me kind of walk you through how this works. It's a today-only opportunity. So if you go to www.thesteadytrader.com/live, you're going to see an outline. I literally have like 2 minutes to walk you through this. You get 12 months of the market rover, 12 months of the credit spread signal service, option income secrets course, 4 strategies, $25,000 playbook, Q1 2019, first name, last name, email address, city, state, zip code, country, phone number, credit card, Visa, American Express, MasterCard, Discover. Notice where it says 1997. Down here at the bottom, you see where it says have a promo? Type in member, MEMBER. That's where you get your $500 savings. You can see it goes to $14.97. This is for today and today only. The reason why we're doing this is because we're invited by TradeThirsty to come on here with the Toasted Traders. And what we want to do is provide this gift for you. You got to understand that we're only going to be providing this today. And we're only going to be giving out the $25,000 on-demand recording for those of you who sign up today as well. Okay, so literally 1 minute left. Don't forget to type in member, MEMBER, so MEMBER. We have some extra goodies for you too. So if you're looking for your question section box, go ahead and click on that little orange arrow. And down at the bottom, you see the question section box where we have your actual link that we put in there for you. Okay, so keep in mind, what we're going to be doing is we're going to give you a credit spread module upgrade. It's a $9.95 value. We're signing up today as well. It's actually pretty neat where we're going to do an add-on inside the market rover, but it's only for those of you who get involved today. I'm pretty much out of time, but let me just kind of ask the question of those of you who are signing up. Do me a favor, type in me, M-E, into the question section box if you're signing up right now. I just want to make sure that we go ahead and we send you your material. So how this is going to work is you sign up now. We're going to send you a confirmation email. We're going to give you your username and passcode to your online portal because we're going to give you access to the steadytrader.com online customer profile. You're going to get access right away to all of your open positions. You're going to get access to your on-demand videos. We're going to give you access to the market rover right away. Okay, so Peter is signing up. So Peter, we're going to make sure that you get the confirmation. Terrence is signing up. Caroline's signing up. David's signing up. Terrence is signing up right now. Okay, so once again, you got to go to www.thesteadytrader.com. Just make sure /live. Make sure that you type in member inside the promo code to get the extra $500 off. Let me go ahead and drop that link in there one last time. And I want to go ahead and say thank you so much for the opportunity to work with you. We truly, truly appreciate the chance to serve you. We're excited to work with you. We're excited to share with you and give you this access. We've helped out a lot of traders, just countless individuals go to Surge and the Steady Trader to learn how to take advantage of this opportunity. Really, truly think about it. Even if you just enroll today, $14.97, you get a great savings, and you just attend the on-demand recording, and we show you how to make $3,000. There's a $25,000 opportunity, and all you do is make $3,000. You doubled your investment. Well, that's a great ROI. But then you have 12 months of the market rover, you get 12 months of the signal service, and you get unlimited access to the option income secrets course. Hey, I truly appreciate the chance to work with you. I want to say thank you so much to Jeanette and Hubert for inviting us on, and thank you very much for TradeThirsty. Listen, you're going to have phenomenal speakers today, phenomenal educators, phenomenal traders. Learn a lot. Really soak it in. Hey, everyone, have a wonderful day. Have a wonderful weekend. On that note, every day, helping traders find a way. This is Joshua Martinez out.